Hello, everybody. It's your boss, Joe Boss. We got quite a bit on the docket today. I'm just here scrolling through some financial juice. Check this out. U.S. market wrap. 3 rate cuts are reasonable baseline for 2024. A bunch of speeches out of Dali. That's actually quite old. That's from February 16th. Some China information. China trying to talk to Canada about stabilizing relationships. A lot of news, economic news around Canada. You can see right here we have Canadian CPI year over year and month over month due in the next 24 hours of the trading day. And the PPI inflation came out, and it came out a bit hotter, especially this month over month. Right? And then there's Japan. Machine orders coming in at forecast here month over month and hotter than expected year over year. Just going through the news. Bundesbank. Oh yeah, Germany likely in a recession. I saw that from earlier today. I have a feeling that the Bundesbank are going to try and take this, we're in a recession. Get the inflation down. Get the inflation lower. We're in a recession, even though it's a very shallow and technical one at that. It doesn't feel like that, though, because of the inflation part, which is, why you're saying like, hey, the economy's bad. Stop spending money. Stop creating the inflation. God, yeah, we'll have to see how that turns out. We got Nvidia on Wednesday. I was just thinking about that reading this, but that's Euro stocks. Canadian PPI came out. You can see it doesn't look like it's going to jump higher from here. All right. Let me go ahead and bring up S&P Global's week ahead preview. Flash PMI releases and rate decisions in Asia, right? We have the PBOC coming up with a decision, actually, I think, here, interest rate 5-year, interest rate 1-year. Let's see here. FOMC meeting minutes. And then we also have RBA minutes, right? If I'm not mistaken. There you go. You got the Nvidia's earning call right there. Australian composite PMI flash. So, yeah, it's going to be a bit nutty. And then here's all the European PMIs. You can see those are all highlighted in red. Every single outlook that I read. Everyone's watching European flash PMIs. Yep. And then a bunch of Fed speakers. Back to back Fed speeches on Friday. Wow. Well, on the 22nd. Yeah, that's Thursday, not Friday. And then this is Friday, where we get some ECB speakers to follow up. And then some business expectation, inflation expectation stuff. All right. So looks like going from Wednesday forward, this is going to be a pretty heavy week, unless you're in Canada, because you got CPI coming up here in the next 24 hours. Let's go ahead and check out USD CAD then. And you can see on the PPI measure, it did not help the Canadian dollar here on the release of that PPI. Don't get me wrong, this is a jumpy mess. And I don't know, dude. That technically, I wouldn't say so. But you know what? I don't have great expectations for Canada going into the rest of this week here. Let's go ahead and check out our high odds here. Let's not forget to zoom in so it's a little easier for you guys to see. We got a cluster of seasonal highs here and of highs here on the distribution, non-seasonal. So I still think the mid 135s is still in store given the day we got so far today. Let's go ahead and pull up our watch list, check out the DXY. DXY is strengthening here off the start of the today. I don't know. I think Nvidia is going to probably post decent earnings. It's insane where we're at. We have to go check out Nvidia. I don't know. Again, these are the monthly expectations. That's what the blue is. A lot of people just selling Nvidia because it's high. And, you know, God forbid, you get a huge, massive up surprise on the Nvidia earnings. Not terribly unlikely, to be frank. But if that comes through, you'll end up with another jump to the high 700s. And you'll be closing way above this expectation. Yeah, it's already here at the edge of this distribution before you start seeing some more tail scenarios. Yeah, this is all tail stuff. You don't go that high very frequently. Usually February you top out a bit sooner. So this is definitely got some upside jump risk. The PMIs in Europe, those flash PMIs, also provide some upside risk. Even though the yield spreads look horrible, except for the most recent, they've become sort of neutral. The intermediate to long-term lagging yield spreads are still quite negative. But net, this could end up with a rotation slightly higher up on the month. Let's go ahead and check out our weekly odds here. And the expectation I set at the end of last week was to go higher here to 108. And then we'll figure it out from there. Because setting expectations for these flash PMIs, and there is upside surprise risk to these flash PMIs. I'll go ahead and bring up the PMI weekly report from S&P Global. Again, these guys used to be IHS Markit, and then S&P Global acquired them. But this little section over here, this little gray area, this is the section that talks about, hey, the February PMIs, what's moving stuff. And they specifically mentioned supplier delivery times. So all these Red Sea attacks affecting supply chains, that said, the spillover effect from this have been contained, with manufacturing input price inflation remaining well below its historic average. But you can see orange here is the PMI supplier delivery times inverted. So up is more supply delays, and this blue line is manufacturing PMI. So as you get more supply delays, that can send the manufacturing PMI higher. Let's see here. However, our analysis showed that European manufacturers were the worst affected by these disruptions in the Red Sea. So the Flash PMIs are going to give an update to how well European factories have dealt with this, with risks of prices rising due to costlier shipping and squeezed supply. This is why it's important to read your outlooks, everybody. Because these are the real experts. These are the guys who create the PMIs. IHS Markit, acquired by S&P Global, now produce the PMIs. And if I can recall, I wish I could see who wrote this blurb, who was the author of this little blurb. Because there's a particular analyst from IHS Markit who's still and has been the head of the PMI data for a long time. I particularly like listening to his commentary. But yeah, nevertheless, the disruption in the Red Sea persisting through February supply chain friction will serve as an unwanted but ongoing risk to monitor at a crucial time for global monetary policymakers. So this implies, hey, if you see upside here, that could actually keep goods inflation, at least in Europe, somewhat stable. Because remember, this is the, let's see, supplier delivery times. And I think there was a prices index referenced here. I'm looking through the text, but when delivery times go up, there's more competition to actually pay to have your stuff either delivered first or as soon as possible. Delivery times go up and shipping costs go up, and depending on the company, they can pass those costs on to the customer. So this can have an impact on some goods inflation. Maybe not immediately, but it can be a leading indicator. So we might see some stickier goods inflation if these delays continue to increase from this relatively lower level here. And so that's why I'm saying, hey, there's probably going to be upside risk, because you're going to see as PMIs go higher on the risk of higher inflation due to those delivery delays. You could see more hawkish stances from the ECB. And that would lead Eurodollar higher. Because it's about the timing. FX is a relative game. And when we look at the Eurodollar chart, we have to think of the relative central bank policy between the ECB and the FOMC and the Fed, right? So if the ECB sees more hiccups, more sticky inflation, they are likely to turn more hawkish and push out their first rate cut expectations further out in time. That would cause the market to reprice Eurodollar higher, because the FOMC is not expected to change their expectations. Right now, May, June is still the target. And unless US inflation proves stickier over the next 2 months, over the next 2 or 3 prints, before we get into the May and June meetings, then I would see Eurodollar going higher. But then again, we'll come to that road when we cross it, because we have another FOMC meeting coming up here in March. And at that March meeting, the FOMC could very well, at that point, say, hey, we're going to be pushing our expectations into the third quarter. Or we're going to stay on hold for longer. Also giving a more hawkish view. So it's a game of relative central bank policy and economic data. Not just looking at the chart, looking at your probabilities and saying, oh, this is the likely top. Oh, this is the likely high. If you understand what the current expectations are and how those expectations can change, it'll be a lot easier to figure out what expectations to have given new pieces of information. So I'm going to be watching those Flash PMIs and, again, the upside risk because of those delivery times increasing, and then having the knock-on effect of keeping inflation sticky. And when inflation is stickier, that's going to make the ECB more hawkish and push out their first rate cut expectation into the latter half of the year, potentially. They'll just make them more hawkish. And if that happens first, before expectations for the FOMC getting hawkish occur, which would probably be first, second week of March, PMIs are coming up here on Thursday, then I would assume this is going to lead to some shorter term Eurodollar appreciation going into the PMIs and potentially into the end of March, into the end of February. But we'll have to also follow up on those Fed speeches, because as we get those European PMIs, if I go back to financial juice, this is why I always check the calendar here. So you're getting all your PMIs here in the AM. These times are in US Pacific time, which is the West Coast on the US. And then you see in the New York session later on in the day. So first you get your PMIs, and then you get a load of Fed speakers. You get 1, 2, 3, 4, 5, 6 speeches from people at the Fed. And if these guys come out more hawkish and they explicitly say, probably aim for 3 rate cuts, because all these speeches here are going to give an insight into how the dot plots are going to be written and print in the March meeting, because they come out with a report with the dot plots for their 2024 expectations of where the terminal rate's going to be for the year. So these speeches are going to give us expectations on that. So it could be quite volatile if these PMIs surprise to the upside, and then we get significantly more hawkish speeches out of all these voting and participating members of the FOMC. It could be particularly volatile here on the Eurodollar, spiking up on PMI surprises, flash PMI surprises, and then taper off into the end of the week as you get people interpreting these speeches, potentially as more hawkish. And then that can lead into a drift into a lower negative drift into the close for the month on February. Again, it's important to think about these things and think about the ways this stuff can play out reasonably, so then you can set basic expectations, and then when the things actually realize, you can see if your expectations were correct or not. So this is the meat and potatoes of this week that I'm looking forward to. And I still am going to have bullish expectations going into here. And you can see I didn't put any closing expectation. That's because of this whole mess with these Fed speakers. Because this could put the kibosh on holding 108, frankly, on Eurodollar. And the next thing on this docket here is New Zealand, which is already at a likely high on the week. Yep. We got a little bit of a timeout there on the indicator. Sometimes the indicator uses too much data. Try and load as much data as you possibly can into these range probabilities, so then you can get as accurate statistics as possible. So I set expectation for going lower off the bat. That didn't happen, so this expectation absolutely just has not been met. But we are going higher at this point here. We're going to have to see if the market actually believes a rate cut is going to happen or not. If we go and look, for example, at Westpac and ASB, they've both pared back their expectation for a rate hike. You can see New Zealand dollar next 3 months sideways expectation. And again, it's a whole in-depth document on RBNZ expectations. And RBNZ, I believe, is next week. So it's important to, at least for people trading New Zealand and New Zealand equities, to figure out what those expectations are and what the risks are around an additional hike potentially coming out in the next week. So if I just read through this and I read through this, some of the things that stand out to me is the talk about the increase in immigration in New Zealand. ASB talks a bit more about it than Westpac, at least in depth in these weekly reports. If I can highlight it, yeah, migration figures, on the other hand, remained fairly strong, with almost inevitable upside revisions also published. Migration still looks like it has peaked, with the month-to-month flows trending lower, but from a slightly higher peak and potentially holding up for longer. Now here's the RBNZ part. The RBNZ has been getting more worried about potential demand side pressures from migration, and these figures will keep the RBNZ worried that inflation not fall as fast as it would like. So we haven't seen these demand side pressures realize themselves yet, but they could in the coming 2 or 3 months as the people who are migrating settle and start spending and interacting more with the New Zealand economy. Let's see here. Here. While some commentators and markets have jumped ship from team easing to team tightening, we still find ourselves somewhere in the middle. We think this is Westpac, by the way, we think the, quote, high for longer strategy can still work. But the time is shortening to continue giving the data the benefit of the doubt. We are perhaps slightly more confident that the recent drop in headline inflation will allow for a return to 1 to 3% target range before 2025. But progress could be slower beyond that without significant near-term easing in the labor market. And given these migration trends, it doesn't seem like that is going to be a very strong assumption for Westpac to be making here. Hence, we expect another hawkish statement from the RBNZ later this month that could potentially threaten policy tightening sooner than indicated last November. We see that as consistent with continuing with, quote, longer strategy while managing the risks to the current OCR might not deliver sufficient inflation. And the prospect of OCR cuts will remain distant in the RBNZ's projections. Hence, you're seeing a bit more recovery here. Now, we've been in a range for pretty much all of February in about 150 point range, call it 100 point range between 60.50 and 61.50. If we check this out on the month, I did say, hey, there is a risk of going higher here, given those rate cut expectations. And then we got the kibosh on that here on this day. Don't get me wrong, you can still get your positive drift into the close, because this whole section right here is pretty dense probabilities for getting your close on the month. So I still wouldn't count this out. And if we look at the seasonal forecast, you can see the expected value is still quite mixed over the next week of trading days. And if there is more upside, it's probably going to curtail around the end of February, the last 3 days of February. So if there is an upside drift, it's all welcome. It's all within expectations. Don't get me wrong, this is definitely wrong. But this month-long expectation is still in play of going to the 62 spot here on New Zealand dollar. All right, let's go ahead and actually check out Ethereum. Ethereum is still ticking higher. Even as we're talking, it's already moved up about another $40 just in the last 2 hours that we've been live. Yeah. Looks like that's funny. When you look at these monthly ranges for closing odds for the month, we pointed out 3 spots. This is your bearish regime where you get your bearish closes. This is more market neutral regime where you're essentially closing flat, either a little positive or a little negative. And this is your bullish regime. So now that we're priced here, it seems more reasonable to me at this point that we end up closing above 3,000 on the month. Yeah, it's going to be hard to figure out exactly where your top's going to end up. 3,500 is not out of the question here. But I'd say most of your closes are going to be in the, call it 3,050 to 3,300 range, somewhere around here towards the end of the month. Let's go ahead, set that as the expectation. And TradingView came out with a new icon for the settings. It's no longer gear, it's this hexagon thing. It's a nut bolt. So we'll go ahead and set that as our closing expectation. As far as our highs, this thing can go as high as it freaking wants. But it looks like sometime later today, over the next 24, 48 hours, we'll be crossing above 3,000 for, I don't know, the first time in a long time. First time in close to 2 years, we'll be above 3,000. Yeah, quite bullish. And we can also check out Bitcoin. Bitcoin is holding up. And just because Ethereum moves up doesn't necessarily mean Bitcoin has to move up, and also vice versa. Yeah, it's going to be interesting. I would still have, looking at this particular week, if you look at the seasonal expectations, I'd probably get more risk on once you're past 54K and then going higher past there. Oh, I want to check out the high odds. Yeah, and you can see that's sort of your cutoff before you get into the gray zone here. And again, most of your lows, it's like 84.6% of lows seasonally that occur over the last 13 years on Bitcoin for this particular trading week are below this 50.8K mark. Close to 53% of your lows this week are around there. The question is, do seasonal expectations hold up when you have all of this bullish driving force behind the crypto market, behind the future expectations of Bitcoin going to like 60,000 over the next like 3 months or something? I don't know, I'd probably be more bullish going into next week or on this pullback if it does occur. Other than that, crypto expectations can be wildly volatile, jumpy. So I'll go ahead and leave these expectations as is for the week ahead here. Oh, it looks like Monero dropped 6%. Wow. I don't know. That looks like decent buy. Wow. What happened there? Those are some crazy, crazy drops. Yeah, you can see this is your tail. That's quite a tail. Oh, let's check out the closing odds here. A lot of closes around this center spot here. I wonder what's gone wrong with Monero. Wow. That is quite a dump. Yeesh, it's a 40% drop. Takes it back to June 2022. Well, that'll be interesting to follow up on and figure out what happened there. I haven't checked out Monero in quite a while here. There is one more asset in the trading group. We did an outlook review, and we looked at yen, the yen outlook, and we looked at some Swiss franc analysis. And I thought it'd be interesting to bring up Swissy yen. So the Swiss are cutting their economic policy. They're becoming more dovish because they don't want a problem with disinflation or outright deflation. They're not generating enough inflation. Meanwhile, Japan is generating just about enough inflation, and they're trying to figure out the right time to start hiking. So I'm going to set the expectation that we see lower prices here on Swissy yen over the long term. But man, it's probably going to take a good while. But I think that this uptrend is going to end up reversing quite a bit of this appreciation as you have divergent policy between the Swiss National Bank and the Bank of Japan going in exactly opposite directions. The BOJ tightening, which would send this chart down, and the Swiss franc loosening, the Bank of Switzerland's National Swiss Bank loosening policy, which would send also this chart down. And let's see here. Anything else that stands out? Probably, wow, Australian dollar yield spreads are super, super negative. Let's check this out for, yeah, a lot of lows this week, usually around here. And a lot of your highs around here. Yeah. I'd say crossing above, call it 65.66. That's probably going to create a risk of getting your high at the 66 handle. So I'd say that would be the upside risk, crossing above there. But the lows, I think, are still in play here for the Australian dollar. We'll see how this turns out going into the rest of the week. Hey, Isaac, nice to see you. Everything's going so far so good. Actually, I'm going to add that Swissy yen to my watch list later. But this I particularly liked. We found out about this while doing our group research. I particularly like this idea. Only problem is that this is yen. And depending on where you live, you might not be able to get a whole lot of... you're going to probably need to put up a whole lot of margin to trade this particular pair. Now let's go ahead and check out the ES and the NQ. So far, so good. Holding up on expectations so far. Didn't come down right off the bat. It's holding up. We'll see how it develops throughout the rest of the week as we get into earnings, especially NVIDIA. Speaking of, we can actually pull up NVIDIA right here. And NVIDIA is, it's not open yet. It hasn't traded yet into this next week. But we can still look at the odds for the week ahead. A lot of highs below 760. And a lot of lows. A lot of lows around the $700 mark. So I'd say that would be my range between 700 and 760. But again, you see some upside surprises on NVIDIA, and you're going to end up with super significant spikes higher. And at that point, it becomes a guessing game. You're talking maybe it gets to the high 700s, close to 800 on a particularly good spike. And that'll end up saving the NQ. And had more bearish expectations going into the open of this week, but things are holding flat until more earnings start to actually come out. You're a long New Zealand dollar futures. That's good to hear. It's probably performed quite well so far. Yeah, I would point out the of going above this 61.6 spot here on New Zealand. Again, it's just break of these new highs. You're going into a low probability zone, so more upside over the next 48 hours into these prices. Yeah. Risk of going to 62 or a bit above that to a monthly high starts to become a bit more probable. I was setting an expectation that we'd hit this section actually during this last week. If we didn't get this one dump, this one red candle, we would be up there right now. Oh, you're looking at pound? Well, you can go ahead and look at pound. Again, it's all quite flat here. The bearish expectation has been playing out here. And I do expect a bit more bearishness at some point this week. Yeah, and figuring out where the high is going to be, at least based off the seasonal data, is effectively a guess. Using the ranges the high could be in now. But I'd say a lower low this week is still in the cards here on the pound. And then we can begin contemplating if a rebound is in store once we look at the rest of the economic data that's available to us. Yeah, starting to bring back the streams on a daily basis. And yeah, it's a bit different going from, I think the last time I was consistently streaming was doing like 10 consistent viewers for like the whole hour. And now it's down to like 3 or 4. That's just because people don't know I'm streaming again. But that's kind of what happens when you take a break and then come back and then take another break and then come back. Less breaks, more consistent everyday posting, right? Every day, do a little bit. In the long run, I'm not concerned about it. These yield spreads on dollar Swissy are quite strong. No, they're mostly long-term lags coming in here. Again, hit a likely high on the month. Yield spreads look still quite bullish. Probably still some more positive or sideways movement in here. Quite uncertain about where we'll end up ending the month. Let's see if we have some decent closing odds based off the seasonal data. And yeah, I would say the bearish drift here into the close is going to be a bit more reasonable to set an expectation. You can also look at the seasonal forecasts, and you can see sideways, no super significant seasonal expectations. It's all quite 50-50. So yeah, maybe some negative drift into the end of the month here on Swiss franc, dollar Swiss franc. Oh yeah, we can check out gold and oil. Let's start out with oil. I have quite bullish expectations for oil this week, specifically because we got a lot of closes seasonally for this week that are at least above the $78 mark. And then when you look at these high odds here, these high odds are quite concentrated to the top side here around 80. Yeah. Figuring out where your high is going to be once you're past 80.50 is going to be a bit harder to figure out. But the low could be in for the week based on the ranges. I don't know, it does look like, yeah, I think I remember from the week ahead stream I did last Friday. These two probabilities above the central pivot get you at 20%. So I'd say bullish continuation odds are a risk here. So that could be the low for the week. So this expectation might be more spot on than the rest of them. And we can go ahead and check out gold. Again, more bearish expectations on gold later on into the week. Yeah, 25% of the time the high is in this spot here. Yeah, gold looks like the reverse of oil. Looking at these odds. Net, I'm expecting more sideways action on the month. Because I'm looking at these closing odds here, where a lot of your closes are effectively around the current price. So call it a higher low from here, and then drift up into the close. Probably in the 2020 to 2050 range. I know it's a 30-point range, but we're dealing with probabilities here and expectations over a time horizon. If you're giving a point forecast, it's not if you're right on a point forecast on saying we're going to get our high at this exact price, and that turns out to be the exact tippy top exact right price, most of the time that's going to end up being luck. You're better off setting a range, a projection interval for where you expect, okay, from this point to this point, based on my expectations, I think we have a pretty decent probability of closing the month in this range here. And I could probably range it down to 2022 to 2042. So that 20-point range instead of 30. So we'll see how this turns out. And this forecast was made, I don't know, 6 days ago on the 13th. Today is the 19th, so yeah, 6 days ago. Man, Apple keeps drifting lower and lower. Apple not holding up too well here. It is not holding up too well. Yeah, that could be the high for the month. Let's check out our low odds. And that probably is low. I would be concerned about making a new low. Yeah. So below 179, I'd say it's going to be a guess as to where the lows are going to be. Don't get me wrong, you do have some higher probabilities here, but based off the seasonal expectations for this week, for this month, actually, doesn't look so hot. We can actually look at it on the week. And yet a lot of your lows around here. Let's go ahead and pull up the ranges. Yeah, you can see once you're moving past here, it becomes a guess where your low is. And you can see these sharp bottom mix, people buying in here, some in here, some in here. They got in there, and they still weren't able to overcome the selling pressure here. Yeah, Apple below 180 is going to be a problem for the NQ, even if NVIDIA does surprise to the upside. However, there is probably going to be some give back, because as NQ goes up or as ES goes up, you're going to see some of those flows go into Apple as well. So I don't know if NVIDIA is going to be able to carry the whole freaking index, but if that ends up being the case, it's probably going to be something to fade, not necessarily maybe on NVIDIA, if there's an upside surprise in NVIDIA. We can check out ARK. ARK holding up quite well. Again, hit a likely high on the week. And that's pretty unlikely, but that's for particularly bullish weeks. Yeah. Let's go ahead and set a bearish expectation here. Probably more conservative like that. Let's look at our closing odds. And again, we only have 8 samples here. So let's also look at our, yeah, that kind of lines up. So let's go with positive drift into a close. And let's see how that expectation plays out for ARK. Alrighty, went ahead and covered a bit more stuff. Didn't cover all the FX pairs like I usually do. Actually, I'm pretty sure I covered everything, maybe except for USD yen, dollar yen, which is just holding up here. Yeah, not sure why that red line is there. Usually like to have... Actually, maybe that's... Yeah. No, I know why that red line was there. This is a whole gap area targeting this. As soon as you're crossing this spot here, going to this spot becomes a bit more likely due to the slightly higher probability. Still risky unless you're getting longs down here, right? Right? All right, let's set end of month expectations. It's probably gonna also follow Swiss franc. Yeah. I'd say slightly negative expectations. Net it's probably going to be sideways on the dollar. Again, the PMI surprise is something to watch. It's probably going to be nice for the euro. But man, that move can absolutely get faded going into the month ahead. Although next month is pretty consistently bullish, although you can see it is quite jagged in the expectations. Yeah, so we'll see how things play out going forward as we get closer and closer to the PMIs for this week and those Fed speeches that come out later on the same day. That could definitely drive the dollar higher if those Fed speeches are particularly hawkish and set dot plot expectations higher than what the market is currently expecting. All right. With all that said and done, I'll go ahead and end the stream here. Go ahead and say thank you guys for watching, and I'll see you guys in a bit.